Hi, welcome to the market alert for Thursday the 8th of December 2016. So yesterday, this is the live recording from yesterday. You can see there the market opening and trading sideways. We had a potential buy signal. This was filled, which you'll see in just a second as the the sell signal failed. And then the market just played around with around 5 points, 6 points profit, and then kept coming back before we had the crude oil figures. Now the crude oil figures, as I've said before, you need to be out for these. We never used to be, but since the 70% drop in crude oil prices, it has been upgraded from a medium impact news item to a major one, and it's been the focal point in the last few weeks as well with the OPEC deal and so on as well. So it's best to stand aside. You can see there at the moment sitting on a small profit, and then the market comes back to break even. You will also see what I've done here is draw in a line where the resistance was, and let me just go forward, not so fast. I think I need to come back a bit here. There we go. Yeah, so there we have the news for the crude oil figures, minus 2.4, and then the market trades sideways. And I sent a note out because the market got into this sideways range and said if it picks up, then might have another look. We can see there for a good half an hour or so after the market still traded sideways, and then broke the 19,269, and then made its move in what would be deemed as the quiet session. And at this point, I'm looking at the daily chart, and you can see there the market's taken out the recent all-time high at 19,275, and you'll get days like this where the market will just keep going and going. It's what's known as a melt-up. And it's certainly melting up at the moment, also known as the post-election honeymoon for the market as well, where I think it was up 6% for Reagan in 1980, up 3% at the moment for Trump, but it always ends in disaster thereafter. So again, you can see the market moving high. I'm going to whiz through here. You can see it's up significantly now, and a shame we don't get a buy signal in between, because this bar is obviously outside of the range of the 25 points, so I'll come to that in just a moment. And then we get a buy signal late on in the evening, which drives through the entry price there, the scalp, and then sideways again we get another one, and this one just managing to stay above the stop loss, and then also hitting the scalp later on in the session. So the final picture looking like this. This is now the chart for today. You can see the market stuck in a sideways range and has been all night. And on the Asian markets, they're actually going in and putting in another new all-time high. So let's have a look at this in the daily chart. Let's just bring this down a bit so that we can see it, and spread it out a bit as well. So we've got a new all-time high for yesterday, and that's at 19,560. So the 20,000 is on the cards. We're only 440 points away from the psychological big level. We've gone through the 19.5. They're going to hold this market above that. But what you should note here is the lack of volume buying this market. This market is being pumped up to the upside purely on fresh air. There is no major buying in this market. This is just the Santa rally, the honeymoon rally, the melt-up, parabolic move, whatever you want to call it. And these always end in tears. Now, news-wise today, what have we got? It's Italian bank holiday. ECB press conference at 1:30. All the news will be out when we get to the main part of today. And after yesterday's up move, will we get another big day? Who knows? The markets are bonkers at the moment. They just keep moving it to the upside. I've said this for a long time. They want the markets up. They're going to keep moving the markets up. And if Trump becomes the fall guy, then this is going to kick off in the new year. Also, Yellen next week. They want, obviously, get the markets up first before she increases interest rates. And if she does, and we get the same effect as we did last year, where the market dropped 2,000 points thereafter from the new year, then we will see why they've done this, so that they can bring the market back to a decent level, pump it up first and then bring it back. But we'll have to wait and see. But the honeymoon always ends Make no bones about that. And also another interesting point here is that the implied volatility, even though the market went up 200 plus points yesterday, was at 10.75. Now the day before it was at 10.72 if I recall. It might actually have been lower. Just one second, let me get the figure. Yeah, the actual figure was 10.27. I know it was a 7 and a 2 in it, but so you can see this is actually increased, and that's not right. It should actually have decreased. So this is speaking volumes, saying that the options traders and the market doesn't like the fact that this market, one, is going up on fresh air, two, no fundamentals to back it, three, that you've got the prospect of an interest rate cut next week. This should have gone down way below the 10% level. So this is a sort of an alarm bell situation here, that the options are being marked up with the prospect that this isn't going to last. At some point down the line, within the next few weeks, you're going to see this market reverse, and what it's actually put on the upside likely to be taken away. So you can see in the chart there that the market has this small increase in the implied volatility, and that is not good. That is simply not good. Okay, that's it for today. I will report in later on today, and as ever, thanks for your support and also for watching. See you in the next